All right, good morning, everyone. It's 7:16. We'll get going today. The agenda cover a lot of similar topics that we have been. We'll look more into crop conditions, stocks, and the hard wheat balance sheet, as it's probably the most interesting balance sheet that's out there right now, at least short term. So we'll dig through that. If anyone has questions, please feel free to ask. Um, Going into the crude chart here, we've kind of been bouncing around $100 here. Still a lot of uncertainty out there. Every day we get a new story on whether or not the strait's going to be opened, if things are going to flow. So until that uncertainty gets fixed, it feels like we are just going to grind here between $95 and $105 on crude. The funds have also kind of leveled off here. We've seen managed money for WTI kind of hold steady in this price range, just waiting to see what the next move is going to be. So a lot of volatility is expected. Our fuel prices, whether it's diesel or gas prices, continue to rise. Just be glad none of us live in California because their prices are considerably higher than the rest of the country here. Urea values have also somewhat leveled off here. Um, After the corn report, the affordability is still continuing to move higher. Need to grow more corn to make it more affordable after we saw more corn acres come out. But the overall value at least has leveled off here short term. So, still the uncertainty how much commodity can move. I think there is, from what we've read, there is plenty in the U.S. Prices might be high, but availability is there. It probably has a bigger impact on the southern hemisphere and their crops. They get planted, during the fall time frame. So we'll have to watch and see if there's a longer term impact on overall world production that gets impacted if this conflict stays ongoing into the summer months. So weekly price changes, beans were higher, everything else a little bit lower here. The WASDE report that we'll touch on here in a little bit kind of drove home some price impacts. So we'll start digging through some of this. CFTC, basically, we had fun selling across all the commodities. Um, Laying off some of the longs that they had put on recently. It did put them back short soft wheat, a small long in hard wheat, and we'll have to watch that as we go into the summer months here as we get a better look at what wheat production is going to be in the U.S. and in the world. Corn funds position, it's directly, as we always talk about, the funds move the near term positions. And with the acreage report that we saw, with more acres than expected, the funds did lay off some of their long position. Stayed fairly neutral. They did sell a little bit of beans, but less acres than expected on the bean side. And the wheat side, relatively, unchanged as a whole for hard wheat. I mean, small moves here is we did rally considerably through the last week through Tuesday. We have seen a little bit of a sell off here as we had rain in the forecast, but we'll talk about how that rain and crop production's looking and if we expect them to really change this position until we know the crop. All wheat, small liquidation. The interesting point here is, you look at what happened in the summer of 23 and 24. The funds did very similar buying patterns. And then once they got a feel for what world crops were going to be, we did see that exit come and them get short wheat again. Mainly Matif was the big driver. So, we'll have to watch those EU crops and Black Sea crops to see, will the funds re-engage into the short position. WASD report really didn't give us much on the U.S. side. Very in line with analyst estimates for corn, beans, and wheat. The only surprise came on the world wheat balance sheet that they added nearly 6 million tons to the world balance sheet. And a lot of that was driven by, we saw increases in production around the world, and we saw a reduction in world feed use, which a lot of that came from India. As we've seen over time, rice use in India continues to grow, and wheat use is pretty much leveled off here. The question will be is longer term, if they continue to have large wheat crops, will that flip? Or, we've seen them as an exporter in the past. If their carryout gets big enough, maybe that could be additional supply for parts of the world. So I wanted to start touching into regional stocks and some of the impact that could have on premiums going into the summer months as we get closer to harvest. Corn stocks, this takes into account basically all the plain states. And you had 116 million more corn in all positions across those 5 states, 25 million more milo, and 58 million more wheat. So when we put all that together across those states, we have about 200 million more bushels of grain than we did last year. And, we're staring at a smaller wheat crop, but we have plenty of commodities in the bin. So you're not necessarily going to compete for filling space as much as you might have in the past with a fall crop that is still being carried over in the bin. The impact on premiums, you sit there and look at corn premiums, they probably stay steady. You don't see the August set premium that we've seen in previous years. We didn't see it last year, but prior to that, you've seen a premium for August set corn. So, there is plenty of corn out there. There is plenty of wheat. So when we start going through, especially even Kansas, and looking at the amount of grain that is in storage, there is going to be grain that either has to move or we should be able to fill up space easier than we have in the past. Going into acreage, wanted to look at the survey response. I think a lot of these acreage numbers can be taken with a grain of salt when you only get the lowest performance in responses that we've ever had here. I mean, you look at the light green bar, and that is participation, and it is the lowest in history for farmer surveys. So 95.3 corn and 84.7 soybean acreage, we could still see swings that come out as we move into future reports. So, a lot of question marks on where that'll land and what impact that'll have on price. But, we'll have to watch this as we get into the June and July reports. Regional acreage, more corn, less milo. No real big surprises there. Looking at wheat, where you were down in Kansas, still don't believe that we are up this much in Oklahoma, but we'll use the acreage that USDA is giving us right now when we start projecting out crop sizes. And as we sit here and look at, our production areas and the amount of winter wheat and drought, this is no surprise to anyone here that a large portion of winter wheat is in drought right now. And the drought outlook really doesn't improve, especially for some of the driest areas in the Panhandle and western Kansas. So as we see the rainfall, no other surprise, we shouldn't see any changes to the drought monitor. The rains basically fell in areas that aren't going to help western Kansas and the Panhandle of Texas. And looking at least the short-term forecast here, no big changes. Western Kansas Panhandle continue to miss. So What has that done to crop ratings? We are down drastically from last year. I mean, you look at Colorado, Montana, Oklahoma, big moves in the percentage of good to excellent versus last year, and even pretty large departures from the 5-year average. So when we start looking at Oklahoma, good to excellent, it's one of the lowest here in the last 10 years. And when you start plugging that into similar years, I mean, the wheat yield is probably closer to 25 than it is 30 right now. So the models will start projecting off of these crop conditions in similar years. When we look into Kansas, I mean, it's not some of the worst years we have seen, but it's probably very similar to where you're right around a 40 bushel acre yield at this point. So we'll have to monitor rainfall and then how these conditions play out moving forward. Current estimates, this is ATI's model based on current conditions, is a 640 million bushel hard wheat crop. I think if we keep on missing rains, you start touching closer to the 600 million bushel mark, and down drastically versus last year's crop size. But when we start looking into the balance sheet side and projecting against a 600 million bushel crop, which is in the light blue, we end up with a very similar carryout. I mean, we do drop maybe 50 million bushels versus this year, but we still have a 55 to 60% stocks to use ratio. So when you're looking at, the overall impacts, even though our crop size could be down 200 million versus last year, it doesn't affect the balance sheet due to the amount that we carried over this year. So that will have a driver on price and how much of a premium hard wheat can be to the rest of the world. And the biggest reason that, hard wheat, our balance sheet, especially the export number, can get affected is the world major exporters carry out. It's one of the highest we have here since 2005. So there is plenty of wheat in the world. Right now, where we're priced, we're not going to see non-routine demand. So a lot of this wheat will either have to find a home being carried or traded domestically. So kind of a swing from the big export program we saw last June, July, August, where we were competitive in the world, and that gave us the opportunity to get above 300 million in exports. And with how we're priced and what we're looking at versus world values, we are probably sub 250, depending on what our crop size is and, where some of these world crops end up. Did want to look at how hard wheat performance, which is the blue and green lines versus Matif. This is a yearly comparison. Hard wheat over the last year is down 5%, where Matif is down nearly 15%. So you can see how hard wheat is outperforming over the last 6 months versus Matif, and that is the competitiveness of U.S. hard wheat that has been the move that's made us not competitive into some of our non-routine destinations, whether it be Nigeria or Northern Africa. So looking at world wheat conditions, I mean, there is some dryness that is forming in parts of the EU. We do have a few issues around the world, but the biggest ones are here in the U.S. So as long as the pattern turns a little wetter for the EU, we should expect adequate crops, no big issues in the Black Sea right now. And then, we'll turn to the southern hemisphere later on in the year. But as we sit today, plenty of world wheat. And, with where we sit on price, I don't see a big reason that we need to rally any higher. We're already not competitive. So when we start looking at price targets, I mean, I think we can get another rally maybe to that 650 number versus July. And then, I think that's a good price target unless we see something happen differently in the world. But due to the price spreads, we've seen Baltic wheat work into the U.S. for milling and talks of Russian wheat into Mexico. So the switch is already starting and could limit the upside that hard wheat could really go. 27 wheat, 675, $7. As long as there's good world wheat crops and our carryouts near 400 million, I think it's a pretty good spot to continue to look at having price targets in place. So as long as U.S. wheat isn't competitive, you know, the upside just remains extremely limited. And remember that we still have a carry structure in place. It's not as wide as it was between July 26 and July 27. And if we do have a smaller crop, the impact could be more in spreads than it is in flat price. And that could drive, the nearby month higher, but it doesn't necessarily mean we're going to push July 27 values much higher from here. So something to watch out for as we move forward. As always, best marketing time we're getting into April to really June. So something to watch for if you're unsold for 26. And still, U.S. wheat, this is all winter wheat farm price. They're still projecting USDA somewhere near $5. So as we sit here and look at us sitting above $6, probably worth at least taking a look at marketing some wheat here. Soybean price outlook really unchanged from last couple of weeks. The market is still waiting to see when we'll get Chinese exports, if or when Trump has his meeting with China. Board crush continues to be extremely strong. We're nearing $3 in board crush versus sub $1.50 last year. So the use has been more on the crush side than it has necessarily been on the export side. But we'll have to watch, with where values are today. If we get more talk of additional bean acres and less corn acres, that could move price here as we move forward. And, when we look at the balance sheet going into next year, as long as we have trendline yields, we have a very similar carryout than we do this year. So the balance sheet is comfortable. If we get more acres or we get above trendline yield, that balance sheet gets even more comfortable as we move forward. Corn and milo price outlook. I think if you're looking to price versus the Dees right now, 480 to 510 is a good price target. Last year, we started to bounce through similar values where we rallied in the spring and then we ground lower throughout the year as the corn crop got plenty of rain. We expected above trendline yields. So with the current moisture profile and the acres, we expect another above 2 billion bushel carryout in corn. Some of the balance sheets have above 2.5 billion with the current acres projected. So, that is plenty of corn, and it doesn't mean that we really need to rally prices anymore. The nearby export demand continues to stay strong, good ethanol margins. But at the end of the day, if you are 2 to 2.5 billion in exports, then we probably, or in carry out, then we probably find a way to grind down to 4 to 420 again. So, not a great outlook if you're looking at just the pure numbers, especially with how good the central part of the country has been getting moisture here recently. Some talk, will we see planting delays or will the crop get in? But they can put in the crop fast enough today that, we get a 7 to 10 day window and, the corn crop can be in pretty fast. So Nothing different really here. Just always like to show the marketing time frame. April to July is your best time frame. So talk to your RMAs, have orders in mind of where, if you're going to plant a fall crop, where you want to market those. And as always, give any of your RMAs a call. Here's the list for you. And that's what I've got for you guys today. Any questions?